We're now up to step 3 of our 4-step process, which is to prepare the income statement. So here we have to find, basically we're looking at all our revenues less all our expenses. And if you get confused, just keep that in mind. Revenues less expenses is what we're aiming for here. You've given a template, you will be given a template, and it will look like this. So it gives you some ideas straight away as to how it might work. So the first thing that we're going to put in here are going to be our sales. So we duck and have a look at our overall sales account, and it's $55,000. I'm going to mark off the squares as I pop them in. So sales of $550,000. I just want to get rid of this. Okay. So we're then going to put in our income statement. I'm going to start with sales of $550,000. Now, after sales, we always take out our cost of goods sold. So if you have a look over here and see cost of goods sold, $255,000. Pop that in. And we have to include our inventory adjustment, because that's one of our expenses that relates to the cost of goods sold. So if we go and have a look, it's one of those ones we did down the bottom, $1,500. And our total there, so we're going to have $256,500 of goods sold and inventory adjustment, which means our gross profit is going to equal the sales minus this amount here. So that's our gross profit. That's our first figure that we want to emphasise. And we can just format these so they're all formatted as numbers. I would say, okay. So that's our first key figure there. And if we want to just put a top border above that, it just shows that that's being calculated. Right. Now we have to see, are there any other revenues? Are there any other revenues that we've got? We know that there's a rent revenue account, so let's add that in. So rent revenue is $14,300. We've also got some service revenue. Service revenue up here of $10,600. Yeah.
Sorry.
You're right.
Do you mind if I use your room? Or have you got something on?
I've got some accounting students coming down to do some work.
Okay.
Do you reckon there'll be another room lurking around?
Yeah, no, that's all right. Yeah.
Okay. No worries. Thanks.
No problem.
So we've got service revenue of $10,600. Other revenues that we've got there, I remember there is some discount revenue. And we'll just have to look that up. Discount revenue of $550. And so discount revenue, $550. And some interest revenue from the government bonds. and that is $1,200 there. So if we add all those things up, all that extra revenue, gets to 26,650, and our total so far is going to be our gross profits plus our other revenue. But then, of course, we've got to add in all our expenses. So let's have a think about some expenses that we've got. I know we've got an advertising expense. So when I look that up, advertising expense, $5,000. I've also got an electricity expense. If I look that up, it's $15,000. I've got an interest expense. Of $21,000. General expenses of $52,000. It tells me here that there's some sort of inventory expense of $22,000. The loss from flood, but we're told that we've never had a loss from a flood before. So that means it is not a normal activity, right? So here we're looking at from ordinary activity, so that's not going to be an ordinary activity. We've got a wages expense of $48,300. We've got the 2 years worth of depreciation expense. We might have to add in a few rows here. So we've got two depreciation on office equipment. Motor vehicle. So if we have a look at those, depreciation on the office equipment is $6,500. Depreciation on the motor vehicle is $12,400. Amortisation expense is $600, if I've remembered rightly. So it doesn't look like we've got any expenses except this loss from the flood that we know is not an ordinary one. Oh, and there's a discount expense of $350. So our next job is to add all of these up. So if we say, okay, the total of these is going to be this plus this plus this. You could also just use the sum button there. So now that doesn't look right, and the reason it's out is general expenses, which I think I've put an extra 0 in. So if we just check our general expenses here, $52,000 is what that should be. So if we just change that to $52,000, and we get an extra $183,100. So now what we want to do is take our total here and find out, when we take away all our expenses, what do we end up with. And that's our net operating profit. Now, the only other thing we've got to do that is less any extraordinary expenses, which we've already got in, and that's going to be the loss from the flood. So we put in that amount. So the loss from flood is $22,000. And we get our net profit is going to be our total there, subtract our $22,000 there. The only thing I would change is that so look, just going through that, so that was there, added those up to 183, take that away from that, loss from flood is 22, our net profit then goes to $115,000. And that's the end of our third step.